The broadcast is now starting. All attendees are in listen-only mode.
Good evening, ladies and gentlemen, and good morning to our friends in the lands down under who are with us today, and welcome, and thank you for being with us. Pete, thank you for that quick response, loud and clear from Auckland. Okay, so the sound's good, and it's a pleasure to have you all here with me today. I just really enjoy seeing you all so much. A lot of you are just names to me, but a lot of you have been with us a long time, and I do know a lot of you personally. Alan up there in Brisbane, who kindly directed me to this part of the world in Australia. Alex, Bills, Boyd, my friend from Canada, the Gold King, Boyd Yarn. Good bloke. Chase, who's been with us forever and keeps encouraging me to stop smoking, which I know needs to be done. John Barnes from Canada as well. That's great. Have you with us? David Webb, our good friend, the king of the black lines, Mr. Webby. Don Maydell's a new guy. He's coming to Waiheke. Don, you live in Canada as well. Terry was telling me that my main office is in Canada with where Terry is, and he runs the website for us and does lots of other things. And John Barnes lives about 50 k's or was it 50 minutes away from him, and you're about 60 minutes away. So Terry was saying we've got quite a little community up there. Nice to have you with us. Gary, you're coming to the tutorial. Great. Greg, you should be coming to the tutorial. Hank, good to have you with us. Hank's already done a video tutorial, and he's coming to Waiheke to put the polish on it. Harold, the Gold King. Jack, Jerry Winter, our brokers, with us. Guys, anything you want to know about trading, talk to Jerry Winter. Very interesting point, Jerry, for you. I saw an article on one of the financial papers a few days ago saying that the New York Stock Exchange is going to ban stop-loss orders, and supported, of course, by JP Morgan and BlackRock and all the heavies. And their logic is that those of you who just may not know, it's what stop-loss orders are. They're protective orders. And once the market trades to that number, the stop-loss becomes a market order. So what happened in the sort of August rout is a lot of these stocks actually either were not liquid enough at the number of the stop, or they gapped through it, and they were then filled. Once they become a market order, they're filled in chronological order, and some of them were filled a long way away from where the stop loss was, and of course the clients are very unhappy about that. So what the New York Stock Exchange says it's going to do is just no longer allow stop loss orders. The theory being that you should be watching your screen, and when you know that the market's reached that number, you can ring your broker and say put on a market order, which of course is, it's just crazy. It's just rubbish. How many people who own stocks in America do you think are sitting there watching a trading screen all day? I don't have the real reason for it, but you can bet with regulatory capture, which I'm going to talk about today, that it's entirely for the benefit of the big institutions and the big brokers. It's certainly not for the benefit of the traders. But Jerry, I guess that's not going to happen with futures. I had a look at the CME website. I couldn't see anything about it. So let me know if there's going to be any change with our stop-loss regimes, will you please? Folks, anything you want to know about trading, you can call Jerry, have a chat to him. His details are under the contact page on our website. He's a good bloke, been to many tutorials, been with us for years and years. Always keen to have a talk to traders. So feel free to do that. Okay, lots of other people here. There's my friend Marcel, another Canadian. Marcel, I hope you're feeling really well, mate. Marcel's a big-time Daniel Code guy. He's a doctor, retired now. Been to a number of tutorials, very good trader. Matt Corbett, my mate from Melbourne. The lovely Marilyn's with us today. Hello, Marilyn. And, of course, Mike M., our champion trader from Chicago, the dentist, the deadly dentist. He's Mike came to our Los Angeles tutorial in May, and he wrote to me the other day and said just using what I've taught him, he's made 20 times his tutorial fee in about the 5 or 6 months since then. So he's a gun trader and a great bloke. Tony D. Domenico, snow in Chicago, mate. Get on a plane and come on down. It's 32 degrees here today in the South Pacific in Queensland on the Gold Coast, which is about 90 odd in your temperature. I'm sitting here in a pair of football shorts, looking out at the pool, which is looking wonderful, and wondering whether I've got enough energy after I finish my work today to take a drive 3 kilometres to the beach. The beautiful Gold Coast beach is best in the world, or whether I'll just go flop into the pool. But I don't know about this snow caper. I don't know why you do it. My wife is a skier. She loves the cold weather, but boy, not me, I can tell you. Great to have all of you with us anyway. Pete Andrews, my mate's here. Hello, Pete. We're going to see you. And guys, it's on Monday. It'll be 3 weeks. In fact, with what I'm going to tell you now, in fact, it's going to be 3 weeks on Sunday until the Waiheke tutorial. So time is just rushing past. Bruce, new tutorial guy, Bruce Windsor, is going to do a video. Nice to have you with us here, mate. And Steve Casterly. Steve, I've sent you an email about the other options for tutorials. You didn't respond to my previous email, and I sent you another one yesterday. Perhaps you check your spam. Maybe that you seem to be getting correspondence from Terry, but you may not be getting it from me. But I did send you an email. Oh, yeah, you got it. Okay, it's getting through to you. That's good. Okay, folks, let's move on. And we've got lots of things to talk about today, as always. And I've called this webinar the Commodity Rout. As usual, that's just going to be one of the things that we're going to talk about today. So what you have here is a picture of a nice, very, very expensive piece of equipment used in the mining industry. And I got this particular photo from Zero Hedge, who I enjoy reading occasionally. Some of their stuff is very, very funny. Boyd sent me a video yesterday from Zero Hedge about ISIS trying to shoot down a US jet bomber. I laughed and laughed and laughed, but they are pretty clever people. I mean, they're clever because they keep running all the lunatics and the conspiracy theories, but folks like to see that, I guess. But this was interesting because there was recently a big auction of used mining machinery in Australia, where the mining boom is pretty much over. It's moving from the development stage to the production stage on these newer mines. And we've had massive amounts of this machinery in here. This beast you're looking at now is a excuse me, that was my coffee going down the wrong way, Chase, if you forgive me. And this is a 992C wheel loader from Caterpillar that cost $2.9 million new. As you can see, it's still in great order, great working condition. Went to auction the other day in Western Australia, I think, made $15,000 now. That's just really symptomatic of what's happening to a lot of this machinery. But what I'm going to get you to think about today is what does that mean? Bear in mind, almost all this machinery has been on finance, a lot of it by Caterpillar itself, and the rest of it, of course, by banks and other financiers. So the losses on some of this capital equipment are just truly staggering. And of course, as usual, everyone will do their best to obscure that and hide it, but it will come out eventually. It often takes a long time for bad news to come out. Our financiers are not forthcoming. Is the session running late? No, it's exactly on time. I don't know, maybe he can't hear me. just let me type a note to Art. On time and running now, Art. Okay, I'll send that to Art so he knows. So let's move on, folks. Next picture, I'm just reminding those of you who are not aware of it, the Waiheke tutorial is on in less than 3 weeks. In fact, it's going to be 3 weeks from Monday. Very exciting. That's the island. That's where we have it. We've been there before, and it's really fantastic. Great place and great learning. You're going to see and hear things that you're not going to find anywhere else, and they're truly astonishing. We have had one cancellation. Brian, who's with us today, is a agronomist at a big cotton company in northwest New South Wales. They've had the best rain in 3 years, so Brian's too busy to be able to get away to New Zealand. Busy time of the year for cotton growers, and he's going to do his tutorial by video, which means we have one spot left at Waiheke. If any of you would like to take advantage of that opportunity, shoot me an email and we'll get you organised. Okay, so let's move on. I've just got a picture here you'll see when it changes called Starting the Party. And this is a very nice 40-something foot sports fisher that one of our new clients, Piet, is going to bring over on Sunday of the tutorial and take us for a cruise around the harbour. And we're looking forward to that. Anyone who's going to be at Waiheke on the Sunday before the tutorial starts on Monday, let me know, and we'll see if we can organise to get out on this lovely boat of Piet's. Now, Piet's just my sort of guy. I sent him an email. I sent you an email, Piet, and I know you're listening, saying I'm going to be at Waiheke on the Sunday. You going to pick us up there, or do you want me to go back to the mainland? And also, can I invite some of our other colleagues? There might be 2 or 3 or 4 of them who are going to get there early to come along with us. And Piet hasn't replied to that email, but he kindly sent me an email this morning saying he's paid his the fees for the tutorial, which I guess is probably more important. So you're my sort of guy, Piet, but looking forward to seeing you and going out on your nice boat with you on the Sunday. But have a look at that email I sent you, would you, and give me a response as to how we can organise that. So that's going to be us, folks, out on the Hauraki Gulf, one of the most beautiful waterways in the world. You're most welcome to be part of it all. Okay, I'm going to give you a different view today on commodity prices. I think the media coverage generally of commodity prices is pretty slanted, and it's slanted because it's covered by the business people, the business journalists. It's usually covered almost exclusively as a business type thing, whereas the reality is that we should be talking about it as a consumer point of view. Now, here's oil. You're all pretty familiar with it, and you can see that this is a market that's traded up in the 140s as recently as 2008, been well over $100 for most of 2010, 11, 12, 13, and the beginning of 14, and it's now making some retracements. It's clicking off the blue lines pretty nicely, and it's found support at the 37.66 line. Very importantly, there is the first of the blue lines at $38.52, and the black line, I should say. And the black lines in the Daniel Code work slightly differently to the other lines. They do work on the bar high low as the other retracements do, but where the close is in relation to that black line is very, very important. And Webby, who's with us today, is the master of the black lines, and as he says, they'll stop a train, and they've stopped the downfall in crude, but I mean, you read the popular media, you get the salient points that the world is awash with crude, that all of the new technology that's enabled efficient fracking of oil sands and oil structures in North America and Canada has increased the supplies of oil to the stage that there's a glut of oil. And that's responsible for this reduction in the gold price. Well, of course, if you take a longer term view, which nobody ever does, you have a look at this chart, you can see back in October 98 to August the 1st, the average sort of price of oil was about $25 a barrel. So where it is now at about $40 a barrel, it is still very expensive. The other thing that happens is that governments of some persuasions, particularly of the socialist kind, which thrive in Australia and New Zealand and Europe, see essential commodities as a prime source to extract money from their victims, and that's us, the poor, suffering consumers. And I can tell you that living in a country that's very much a commodity country, when oil was up at $100, $110, $115, $120 for all those years between about 2009, 2014, petrol here was $1.40 a litre. You can multiply that by 2.4 to get the 4.2 rather to get the gallons. And now with oil all the way down from 100 and something to about 40, gasoline is still $1.38 a litre, pretty much. And that is because, first of all, our currency, Australian dollar, has devalued substantially, so importing gasoline from Singapore hub has got much more expensive, and of course the government gouges the rest on tax. America is really the only country in the world that I'm aware of that, from a policy point of view, sees gasoline as an essential commodity and doesn't tax it very much at all. It's very light, the tax in America, which is why they have such cheap gasoline. The rest of us, Europe and Australia, we just, and New Zealand, Canada as well, we just get gouged by governments. So these essential commodities are vital tools because they're the infrastructure. They create the infrastructure on which the world works. If there's no oil, we're not going to get very far. If there's no coal, we're not going to have electricity. I know everyone can get terribly excited about all the alternate sources of power, but the reality is that the bulk of electricity, the base loads, are all produced by coal. That then is another thing that governments like to gouge on because it's an essential resource that you can't avoid. So you will find that many of the big electricity companies, certainly in this country and across the ditch, are government owned effectively, and it's just a way of gouging additional taxes out of an unsuspecting populace who don't understand that governments either own or control the retail prices. This next chart you're looking at is iron ore, which is particularly important to Australia because it's its biggest export. Iron ore and coal are the two major mineral exports from Australia. And it's important to you because this is the building blocks. Iron ore and coal, of course, are the prime ingredients in steel. And this is why everything you try to do with building, one of the reasons is that it's so expensive because the price of steel has been massively and hugely inflated over the last decade. You can see that iron ore is now down from about $175, $178 a ton down to $48 odd. That too is essentially a huge exercise for financial journalists who are constantly looking at a short-term share market view. I want you to think about this from the consumer's point of view and realize just how much we've been getting gouged over the years by an almost completely artificial price for iron ore. Remember, the supplies of iron ore are indirectly controlled almost exclusively by government. You have to have a license to prospect. You have to have a license to find it. You have to jump through 5,000 environmental hoops to start opening a mine. Now, I'm not saying that's a bad thing. The last thing you could ever say about miners is that they're good corporate citizens. They're avaricious businesses that are trying to get the most that they can for nothing, and they're very good at it. The last Labor government in Australia, which would be equivalent to the Democrats in the US, brought in a tax on iron ore. It was designed by many public servants who are paid, some of them many millions a year for God knows what skill, and they brought in the mining tax, and from the you're talking about BHP and Rio Tinto and the huge coal mines in Australia. Australia really, in many ways, is just one great big mining pit. They managed to raise over a 3-year period exactly zero. So the benefit to the community was zero. The great mining boom, through sheer incompetence, the government's been unable to capture any benefit for the community, and yet now they're shrieking that budget's in deficit, which means they're spending more money than they're getting in, and they're desperately seeking ways to raise revenue, which one way or the other will come down to more taxes. And when you look at this mining boom that we've had in Australia, which ran for well over 15 years, I mean, it is almost impossible to comprehend the level of incompetence that has allowed this to happen. Sure, there have been lots of people employed in that industry who've done very, very well. I told you the story of a client of ours from Western Australia whose son had some mechanical skills, no formal qualifications, but he was handy fiddling around with car engines, and he got a job for one of the miners in Western Australia, a young chap, 18, 19, and he was on $2,500 a week as a fly-in, fly-out handy guy, doing some inspections on the vibrations on the big conveyor belts. Well, for those people who were fortunate enough to get those sorts of positions, it was a boom indeed, but the community got nothing from it. The residual from it is zero, and government should have been able to capture a reasonable proportion of this bonanza for the benefit of schools, hospitals, and everything else. So some of you will be saying, Jesus, Needham turned into a socialist. Well, I can tell you, if you live long enough, you probably will, because for younger people, you don't think of these issues. You think only of yourself, I guess, and what you see immediately in front of you. And I've been there and done that for a long time. And as you get older, you're able to take a more of a longer-term view and look at it and say, well, there was, the greatest opportunity, this huge, huge mining boom that's made some people incredibly wealthy, been very, very good for some shareholders, but for the country at large, which owned these resources, it's got nothing. That's the way I look at these this commodity rout which we're having now, and it is a rout. You look at iron ore down to around $40 a ton, and you look at our big miners, BHP and Rio, and of course Vale in South America. They're the big three. There's another one in Australia, Fortescue, that's not that far behind them. But their break-even cost, they say, is around $40. And some might be a bit less. The majors that have owned these mining tenements for decades and decades. So let's look at the other next part of this equation, which is coal. The other is this is a mighty reserve. This is thermal coal. There are various types of coal. Some of it is used for making steel. Some of it is used for making electricity. In either way, you can see that from 2011, when coal was up at $140 a ton, we're now down to about $55. and this should be reflected in massive drop in the price of steel. And it has been to some extent, and we're seeing steel companies everywhere under pressure, laying off staff, and if you read the popular press, that will be, shown as terrible news. It's not terrible news. It's good news. We need, as consumers, to get something reasonable about the cost of these commodities that are essential resources. And first of all, the countries that own these resources should be getting a decent clip of the ticket. These are part of the country that are just simply dug up, put on a ship and taken overseas. We need to get some benefit out of them. It's no good talking about value added and those other wonderful ideas that economists have when your minimum basic wage in a country like Australia is $18.75 an hour. That's the minimum, folks, believe it or not. Then you can see that secondary and tertiary manufacturing processes are pretty well out of business. Why is that so? Well, it's because the government wanted it to be. These things don't happen by accident. They're largely a function of government policy, and Labor went on a mad tear with wage increases and made sure they increased their wages as well, which is why you have so many of our politicians now. Unfortunately, it's becoming a bit like America. This idea of service to the public is pretty much a joke. It's serviced themselves and large money for doing it. Add to that the other commodities involved in these vital manufacturing processes, zinc, down to the lowest price in more than 6 years. Zinc output 10.486 million metric tons January through September, exceeded demand worldwide. And even China's saying their economy faces considerable downward pressure. And next to that, of course, is zinc. That was it. We give you the numbers on that. Nickel, it's down to 89.80 a ton on the London Metals Exchange, and that's the lowest settlement price since August 2003. And the nickel surplus hit 8,300 tons in September. Copper, just been down to $4,600 a ton. And all of these major metals have been getting hammered. Why is this? Well, it's supply and demand, basically. You've had easy money, loose money, not for you and me, cheap money, certainly not for you and me, but for the conglomerates and the institutions. The whole purpose of QE has been to make massive amounts of funding available to institutions and big corporates at very favourable interest rates, and so they've overbuilt capacity. And now that capacity has led to too much supply, too much product on the market, and it's got to be undone. And there's going to be some pain out of all of this. And the question is, as usual, for our big bankers and institutions, for how long can they conceal it? Because they're not very good at facing up to their reality. So that gives you a bit of a feel about the important ones. Let's see what else we've got for you. I thought this was pretty interesting. Caterpillar, as you'd know, are probably, well, they are by far the biggest manufacturer of heavy machinery used in mining and earth moving and what have you. And here's a little chart that I got from Zero Hedge, a very interesting little website if you want to read it. And they have a nice different view at things occasionally, but this is the retail sales by region for Caterpillar. And if, like me, your eyes aren't good enough to sort out all the colours, you can at least get the message that it's down, and retail sales are reflecting that what's been happening in the mining industry. And here's another example that I also got from their website. Here's a D11 Caterpillar tractor, and was 2.7 million now, sold the other day for 46,000. And there are thousands and thousands and thousands of these things. And Caterpillar Financial came out with a update yesterday saying, well, they're the financiers of a great proportion of this machinery, saying, well, that's no problem. We've got a secret mechanism that we can send a radio signal to all of these machines and disable them, just stop them working. And if people get behind on their payments, that's what we're going to do. Well, that's all very well and good, but then you finish up with an immobile hunk of very expensive metal sitting in an inaccessible mine in the Pilbara or the middle of China or wherever else. So I'm not quite sure how that helps the bottom line, because eventually you've got to recover that piece of machinery somehow, and you've got to sell it. And these recent auctions of very, very high quality mining and moving machinery have shown you just what's been happening in this space. Here's the next section of this. This is a picture. It should be about to change for you folks. This is Chevron's Gorgon liquid natural gas project in West Australia, off the coast of West Australia, Barrow Island. And I was interested watching some of the debate yesterday before the Senate Select Committee that Chevron and its partners Shell are spending $48 billion. Once a couple of these sort of projects are complete, Australia is going to be the biggest exporter of liquid natural gas in the world. But return to the question of their tax situation, and essentially what they've done is they've set up a local operating company to build this marvellous piece of infrastructure, and they funded it all from an offshore company. And there's a huge differential in the interest rate. So they're charging punitive interest rates, which then become a tax deduction in the Australian entity. So they're going to spend $84 billion building this wonderful thing with, lifetimes of maybe 100 years or so. And they're going to pay no tax, zero. Because they wash it all out with their tax structure. So this is this issue of regulatory capture, which is a bit of a pet peeve of mine. And what that basically means, it's a cool way of saying that the regulators get captured by the clients. The regulators, of course, are wined and dined by the clients, have the closest relationship with these people. They're no doubt delightful, sophisticated people. And the regulators get overwhelmed by the client. The client captures the regulatory entity, and they then finish up making the rules pretty much to suit themselves. And you see this everywhere. You see this in all of the banks, the financial regulators in the US and UK notoriously. They're off having lunch with a director of JP Morgan, getting their views on the world. That's pretty interesting. They don't actually get out in the street and talk to Fred, the shoe cleaning guy who's got 500 shares in a small company. So they don't actually know his view, and the reality is they don't want to know his view, because the next step for many of these regulators when they retire from the public service is to move into one of these clients in a nice position. That's not to say they all do it, but the reality is that the history of regulation is fraught with regulatory capture, and regulators simply are incapable of doing the job. Is it because the client is smarter than the regulator? Well, usually yes. Does it mean that they have more resources? Almost certainly yes. These guys have access to the best accounting and legal brains in the world, whereas the government will have access to the Crown Solicitor, Crown Attorney, if you like. Solicitor is an expression for the British use for attorney. I can tell you, having being an attorney myself, that there's a vast difference between the best in the world and the good-hearted, hard-working people who finish up working in the government attorney offices. And despite what the romantic movies say, God is with the big battalions. The best advice is also the most expensive advice. So I thought that you'd enjoy that. Terry, who's not with us today, but this is another Terry who's going to come to the Waiheke tutorial, asked me to give him a comment on BHP and whether the Daniel Code had forecast the recent price action of BHP. Now, this is a stock. This is Broken Hill Proprietary. It's now called BHP Billiton. It merged with the giant South African company. And this is a dual listed company. It's listed on the New York Stock Exchange and also the Australian Stock Exchange. And it was also listed on the London Stock Exchange. I don't know if it still is, but it doesn't matter. I wanted to show you the difference in the two charts and answer Terry's question about what forecasting can do for you if you happen to be interested in stocks and shares. This is one of the biggest mining companies in the world. It's a huge participant in everyone's portfolio, those people who have faith in investing in stocks and shares. And it's together with probably Rio Tinto and the big banks. It's a staple of everyone's investing. So just want you to be aware of the difference. This is the New York Stock Exchange chart, which of course is expressed in US dollars. And here's the same market. This is still BHP Billiton, and this is its chart from the Australian ASX, the Australian Stock Exchange, which is expressed in Australian dollars. And you can see it's pretty dramatic. We got a really nice hit on the 30.23 blue line, and when it started its trip down, this is back in April 2012, which means it's likely to continue following that particular cycle. And the next number on that chart is 1871 on this particular group of blue lines. And in response, Terry, to your question, did the Daniel Code predict any of this? Well, essentially we've been short this market since about July 2014. So that was the last waterfall signal. Those of you who came to our waterfall webinar 3 or 4 weeks ago will have a pretty good idea of what I'm talking about. Those of you who are coming to Waiheke, I'm going to show you exactly how to create these waterfall signals. And as you can see, they don't happen often, but when they do, they're pretty devastating and a source of great money and great fun. Those of you who follow our website would have noticed a post from Mike, the demon dentist from Chicago, that I referred to earlier, and I can probably bring that up for you. And we go to our home page, and you'll see in the home page, just on the front here, Mike says, this is the guy I was telling you about. It was at our LA tutorial. After following John for a couple of years on his tutorials, subscribing to his TO3, I was amazed by the fact he was always on the right side of the big moves that occurred in the market. And I wanted to show you some of that because here's a chart of sugar. Now, these aren't big moves, but I wanted to run through some of this week's trading and recent trading with you because honestly, it's just been fantastic. We've had a great year's trading. But I want you to, those of you who are not seeing our Daniel Code charts and not seeing the signals, I want to give you an idea of just how lethal they are and how amazing these Daniel Code price levels are. This is sugar. It's not a particularly big or important market, but this is a typical 2 weeks in the life of a futures market. And you can see that every turn has happened at a Daniel Code number or close enough to it to allow me to create either a blue line signal or a TO3 signal or a plus signal. As Mike was saying, we're pretty well always on the right side of the market, which is the starting point. That's the first thing about trading. You need to be on the right side of the market. And I'm just going to run through quickly some of the recent trades, including some that haven't been elected yet. This is CAD Chief. This was most of these are blue line trades, folks. And I've gone through it a number of times. You should be aware of it. And this all starts with target recognition. So you can see this bar here. If I get my spotlight for you, You'll be able to see it more easily. This bar here, it closed almost exactly on the Daniel code blue line, and that set up the blue line signal. Now, once we have that target recognition, it's valid on blue line signals for 3 days. So the fact that it went through it the next day doesn't concern us. But this is still on a blue line sell. It hasn't been elected yet, but you can see we've got a big key reversal bar yesterday, so the odds are it's going to be elected shortly. Here's today's trading in Euro USD, for which we had a blue line buy signal posted on Wednesday, valid for Wednesday, Thursday and Friday, and of course elected today, Thursday. Nice bit of trading. None of this is, end of the world stuff, but I'm just trying to illustrate for you the point Mike made about the Daniel code being almost always on the right side of the market. This is the buy in New Zealand USD, which was a TO3 and the blue line buy for Thursday. Did you know about it? Well, if you look at this chart, it was pretty obvious, wasn't it? In addition to that, I created the blue line buy signals for you for Wednesday and Thursday. So this is the best way I know of being on the right side of the market. You can subscribe to the Daniel code. There are various packages available, or if you're not already a member, you can have a 30-day free trial, no obligation. And if you can find anyone else who can show you where markets will turn with these numbers, and of course nobody else has these numbers, they're exclusive to the Daniel code, you'll get a feeling of how you get on the right side of the market. As Mike, our demon dentist, said, this is dollar yen, and this was a blue line sell for Thursday, and posted as such. Here's the US dollar index, and this was another TO3 and blue line sell for Thursday. I'll give you an idea of this trading. It's pretty extraordinary. Here's the S&P EMini. We had a TO3 buy for the EMini back on Monday, and you can see it's just continued to roar on up since then. And if you're not, here's gold. Boyd, I know you'll be thrilled and jumping up and down. We've had gold on a blue line and a TO3 buy signal for Thursday. It was elected and off it's gone. And I know now you'll say, well, we want to see another big lot of up movement. Yes, I know you do. Boyd's a great gold bull, and very good at his gold analysis. Lovely guy. I met him when him and his wife were traveling, came to New Zealand, where I've lived for 12 years. And we had dinner at the local Chinese restaurant there, and it was great pleasure. He's a lovely guy, got a great sense of humor. Keeps me amused too. He sends me these little things that I miss, and I have a laugh about them. So there's what happened with your blue line buy signal in gold today, Boyd, and there it is, mate. So that was nice. Here's copper. Hasn't turned yet, but you can see this is your target recognition on this inside bar. Target recognition happens at a Daniel code number, either at a bar high low or on the close, and that bar there closed just a few ticks off the 207.90. I'm looking for a turn in copper. We have a current blue line signal running on copper, still valid for Friday. It may get elected. Nothing about the Daniel code tells us about quantum. We don't know whether a turn is going to be a 1 to 3 day counter trend or whether it's going to be a major intermediate turning point. But I teach you how to trade these markets, both at webinars and in much, much more detail at tutorials. But I am looking for copper to turn, so keep an eye on that one, folks. And here's our compliance statement, which we are required to show you, and I always am happy to show you because trading futures and Forex has a lot of risk in it, and for those who don't know how to trade properly, it has massive risk in it. So the best way to get rid of that risk is to learn how to trade properly. So do come along to a tutorial as soon as you possibly can, and I will teach you how to trade profitably and safely. Okay, so we can get out of this and move on to some charts I wanted to show you. Here's our drawing tool menu. We need this one. Click to exit. We can get out of that. And we can now go and have a look at some of these commodity charts. Pete, yes, I've got your post. Thank you. Yes, invite or we'll pick you up at Waiheke. Great. Any of you who missed it, I wonder if it's still there. I want to show you. Pete is a new Daniel Code tutorial guy. He's coming to Waiheke for the tutorial, and he's going to come over in his 42-foot sports fisher. This is her, looking beautiful, and he's going to pick us up at Waiheke and take us for a cruise around the Hauraki Gulf. And as he said, he's looking forward to having a few coldies with me. Well, I'm just your man, mate. I'm about the world champion at that caper, and there might be others of you who are fairly good as well. So if you're going to be at Waiheke on the Sunday, folks, do let me know. Email me, jneedham@thedanielcode.com, and we'll organise to go out and say hello to Pete and go out on this lovely boat and have a few coldies. Wonderful. Thank you, Pete. We're looking forward to that. That will be great. Okay, here's corn. Daryl, who I don't think is with us today. Daryl K. Let's have a look at you here with us. No, appears not to be. Akshay's with us. Akshay, good. Nice to see you, mate. Let's see if Daryl's here. Asked about, don't think he is, asked about grains and commodities particularly, so I've got a couple here to show you. This happens to be corn. Same sort of comment as we make often, that, we're sort of guilty of not going back far enough with our charts. This chart goes back to October 05. So, yes, corn's down from 790 odd to close today at around 360. Is that a massive fall? Well, if you're a producer, it certainly is. But if you have a look at a longer term chart, that's about the mean. That's about the average, the long term average of this particular market. Importantly, I want to have a look at DX with you folks. Now, this is the 24-day charts we're looking at. Each of these bars is 24 trading days. These are very, very long-term charts, and this is of great importance to us. This is the US dollar index, and we can see it came off its lows. It's been dreadfully degraded, this market. Let me bring in some other data so to give you a bit of a feel for where it's come from. I don't need quite that much, but there you are. You can see that this is a market that used to trade up here at this 110, 115, and they got it down all the way down to these low figures here in the 70s, and it's starting to rally now. Well, look what it's done. It started to run up here, and it's found this Daniel Code number. This is the 59% retracement. This is probably the strongest of the Daniel Code numbers. The 50 and the 59 tend to be very dominant until it gets to the black line, which is the 89, which is the make or break. Fed is pretty much declared they're going to start raising interest rates in December. It's not going to mean anything. It's a psychological thing. It'll be a small increase, and it'll be slow and gradual if they do increase. But, it's pretty well meaningless from 0 to a quarter or for a quarter to a half. For you and me, it's going to mean nothing. For the banks, it's going to be a great opportunity to ramp up interest rates on loan and cause a bit more pain and suffering to their clients. But question is whether this really can have a breakout. I don't think so. With the 59% retracement, it's actually still telling you that the trend is down, and it would need a close above that 184 to make you think that this rally was going to be anything more than a corrective rally. But it's certainly a lot better than it was. So from there, we're then going to look at the S&P, always important. This is the broadest measure of markets. So, I like to visit this often, and Again, here's show you a bit more history and perspective. This is the .com top back in 2000. Here's the 2007. Led the 2009 crash, which was great fun. Loved trading that. And you can see this market has run perfectly up the Daniel Code trading channel since March 2009, which is when this low came at 666. So sort of hard to talk about random walk, isn't it, when you see how precise and accurate these markets really are. And they appear to be random because people don't actually understand how to measure markets. And if you don't have the Daniel Code tools, you're no hope. But this has been a wonderfully controlled and precise rally. It's run up and down either side of this thicker blue line, which is the median or mean, much the same thing really, with forays up to 1 standard deviation, 1 standard deviation correction there, and this correction here to 2 standard deviations, which then launched its next rally, which spent pretty much 2.5 years running along the top of 1 standard deviation. So we're well overdue for a correction. Here was the correction. It came straight down to 1 standard deviation from the mean, and it's now rallying back up. And this is a pretty important time, whether this market is actually going to break out to new highs or going to get caught up struggling to get through this consolidation. So we're going to pay a lot of attention to this chart and the slightly shorter term charts as well. The next one I want to look at with you is gold, because I know we've got a good lot of gold bugs who are with us. And as I keep telling them, and I don't think it helps really, it depending when you bought it, gold is in a very, very strong position. I mean, this is gold back in the 2000s. Here's the highs here in 2012. 2011, that's 2011 rather, and it's still in a very, very strong position. It's only corrected 50% of the minor range. Okay, that's completely normal. Markets do that all the time, and from technical analysis, that actually keeps the trend up. Okay, so Boyd, you can jump up and down about that, mate, but it keeps the trend up from a technical point of view. I'm also going to show you the weekly chart in gold. The other two I want to share with you as part of this commodity route is this hugely impressive, important market, copper. The same thing here. Copper is often called Mr. Market because it's so important to markets everywhere, vital ingredient in so many manufacturing processes. So, you know, is it the death of copper? If you read the popular press, pretty much. If you look at a chart, no. This is a market that ran up from 2001 when it was down in the 70s up to $460 odd in 2011, and now it's just gradually correcting the minor swing. This is the minor swing. I'll get my tool here. So there's the high. This is the minor swing from there to here, and the major swing is from this high back first of all to this low. This is the penultimate low, and this is the final low here. There's in fact a couple further back, but not important. And what's happened with this market, it ran down here and it got to this 240.35 Daniel Code blue line, and it rallied from there. Remembering again, this is a 24-day chart, so each of these bars is pretty much a trading month. There's normally 22 days and a trading days in a month. So it rallied 3 months from that number. So that gave us target recognition and said to us, look, I know the number and I'm following it and I'm tracking it, which tells me that the next target is here, 199.85. And that's where we would expect to see the next rally from in copper. We can move on from that to, I'll have to change to my other tool, excuse me. It's pretty ponderous, this, isn't it? That modern technology is not all that we think it is, or at least I don't find it that way, but I'm not terribly good with technology. And the other market I want to show you is soybeans, because Daryl was asking about the grains. Same story here, Daryl. Agricultural product holding up very well, really. Here, these big highs, 2008, 2012. Where is it now? Well, not far off its long-term average. Let's take a trading channel. Let's move it so that it finds those lows there for support. There you are. There's its long-term trading channel. It's just at the bottom of that trading channel, probably approaching somewhere near its average price of recent years. Nothing particularly interesting there. It's a very, very good trading market. I then wanted to move on and show you gold. In fact, I had a couple of on the 6 period I want to show you. This is gold. We tracked it all the way through, watching it bounce off our Daniel code numbers once, twice, 3 times, back up into another Daniel code number here, down, find support again here, back up, test the old number, wander down through, get a 3-week bounce from that number, make a low there, multi-month rally from there, hits that number, does it again, and down here it started hitting. This is the 4th seal line. This was very important support and resistance. Rallied up to the 1186 and heated that. What was support now becomes resistance, and down it goes, and it's broken through those numbers now. The next serious support for this Boyd, if it needs it, is going to be down around this sort of intersection, maybe around the $1,000, 1001. There's a black line at 981.50. That's on the 6-day chart for gold. Let's have a look at the weekly, which gives us more information. And here we are. This is the weekly chart of gold. We saw this market make a beautiful low back in July 24. It was a 4th seal low at a Daniel code blue line at the 59 time cycle. Rallied up into this next Daniel code retracement at 1190.8. Hit a 44 time cycle, another 4th seal line, and that started the push down. 2 weeks later, low of this bar, this is October the 30th, 1138.4 against a Daniel code number of 1138.6. Next week, big push down, 1085.4 was the Daniel code black line, 1084.5 was the low of that bar. Now, you remember me talking about the black line being slightly different in that it works not only on the bar high low, but also on the close. And we then got this bar here, which closed below the black line. And those of you who were at our last tutorial remember me saying that implies that the swing is going to go. And this is the swing here. I've got this time cycle on it, which I'm just going to take off so you can see where the low was. There's the low there at 1072. And I told you at the last tutorial, this closed below the black line implied that the swing was going to be taken out, and it has. So where does it go from here? Well, we have it on a buy signal at the moment off the daily chart. Remember, we can't talk about trend without talking about the time cycle that we're working within, because markets have different trends depending what time cycle you're talking about. This is the weekly chart, so we can have a uptrend on a daily chart and still be in a downtrend on the weekly chart. And often there's more than one trend going on at any one time. But here we are with gold. What happens now? Well, bulls are hoping that it rallies. It's certainly overdue for a rally. You can see the stochastic is very oversold. We certainly had, excuse me, we had Daniel code target recognition last week. This is the week ended Friday the 13th. So it is set up for a longer term rally. We just have to see now what comes from that. Going back to the 6 period, there were a couple of other charts that I wanted to run through with you. Here's Aussie USD, which we've been tracking all the way down, and 68.67 was the last blue line that it acknowledged, and we've had a bit of a rally since then. I still think there's a downside to this. My guess is it's got to hit the 67.79 in the not too distant future, but it is oversold, and a bit of a rally there would be useful. What else did we have here that's really important? We've run through the S&P. We can have a look what it's doing on the shorter term chart. This is the 6-day chart. Same thing. Here's the Daniel Code trading channel, still valid. Looks like it's moved one. Might need to go back one there. Basically, this market's come off a 1 standard deviation correction. It's back up to the median. It's fighting to hold the median. It needs to do that before it moves up to 1 standard deviation above the median, which is up at about 2200 or so. And we should see more of that coming out very quickly. Okay, I think that was the interesting parts of that today, folks. Any questions here? No, everyone's pretty happy. Yeah, okay. I think we've got Steve Castelli Silver. Yeah, we had a buy signal in silver for today, Steve. Let me just have a look on the other computer where the charts are. Here's silver. There we are, Steve. We had a blue line, Daniel Code blue line at 1400.0. The low on Wednesday was 1399.0, with everything set up for a blue line trade on the daily charts. I posted that as a didn't quite guess it was. It was a blue line buy for Thursday, Wednesday and Thursday. So we've got a blue line buy. It's elected. If you'd like me to give you a longer term view of that, Steve, just drop me an email so I can prepare the charts for you. These charts live on different computers to the one I use for the webinars, so I need to prepare the charts for you to have them available for you to see at these webinars. And if you'd like to see a longer term chart of silver, just drop me an email, if you would, jneedham@thedanielcode.com, and I'll be happy to have that ready for you at our next webinar, which will be 2 weeks from today. Okay, so there we are, folks. That's all pretty clear. Pete, we'll make a plan for Sunday, check the weather, etc. Yeah, good. Pete, I'll send you an email and get you a mobile number and give you mine, and we'll stay in touch close to the day. It would be great to meet you. Those of you who are about to start doing your Daniel Code tutorials by video, good luck. Hope they're going to be just great for you. And those of you who are coming to Waiheke, I'm looking forward to seeing you. We do have that one vacancy because Brian's doing it by video tutorial, and I think we might have another one because Akhtar's mother in the States is not well. His wife, rather. His wife's not well. Akhtar, I sent you my best regards for her. And there you are. It's okay. Thanks, Akshay. Should have been there. Actually, I can cover Nifty. We're pretty well the world champions at Nifty, but I don't know that we have a lot of clients who follow it. I started doing the Nifty basically for you and your firm, and we don't have many clients interested in it. And I don't actually know why that is. It's a great trading market, isn't it? But I'll see if I can get I can actually get the futures contract for Nifty. That's folks. Those of you who are interested, that's the Nifty 50 is the most popular index in India. Huge volume and a massive market. And Akshay is a long-time DC guy. He's been a broker in India, and also he's been a prop trader for a couple of the big banks over there. He's a very skillful fella. Okay, well, great to have had you folks. That's about it. I'll look forward to seeing you in a fortnight. Matty, thank you, mate. And if you'd like anything prepared for the next tutorial, the next webinar, should I say, just shoot me an email. Give me a few days and I'll get it ready for you. It's always a pleasure to do that. So, folks, the day's hotted up. It's getting towards 90. It's Friday morning here. In fact, it's now Friday afternoon. And the Bloody Marys are beckoning, and the pool is beckoning. And all my orders for Friday are on. Don't forget, next week is, I think it's Thanksgiving. Jerry, thanks for reminding me, letting me know. We don't get that sort of news in this part of the world. But you folks in the States will have we'll all have a broken trading week next week, because Jerry was kind enough to point out to me that you're going to have Thanksgiving next week. I'll put some post up about that shortly. So thanks for being with us, guys, and enjoy your weekend, and I'll look forward to talking to you again early, as soon as possible. Marcel, thank you, my friend, and God bless. Bye-bye.